Welcome back to Bazaar Morning Call. Just one look at the SGX Nifty. It's indicating a slightly sluggish start, but so many stocks to focus on. Just to remind our viewers, Mindtree posted a stellar set of numbers. Rima is back with us to take us through the highlights as well as the analyst meet takeaways. Rima, over to you.
Hi, thanks so much for that. A quick recap then of Mindtree's key numbers. A big dollar revenue beat at 7.7%. It's come in much higher than consensus expectations. The company's recorded their highest ever deal wins at over $500 million and a record net employee addition. So hiring has been strong. With respect to the key takeaways from the analyst community, they've reiterated their FY22 revenue guidance of industry-leading double-digit growth, and they're confident about maintaining EBITDA margins above 20%. They've also said that they plan to give a second round of wage hikes to the mid-management. Timing has not been known. They're ramping up their hiring to meet the increased demand in the market. The company also gets a significant portion from the travel segment, and over there the company indicated that they've been able to win some of the discretionary spend in travel, so that is a positive. And with respect to their deal pipeline, they indicated that the tenure of the deal is slightly longer than before, which means that the order book is multi-year. In terms of the brokerage commentary, Goldman Sachs is now expecting a 20% revenue growth from Mindtree in FY22. Morgan Stanley is valuing the company at 28 times. Kotak, on the other hand, believes the valuations are too rich, which is why they have a sell rating. The stock is down well, up 150% in the last 1 year. It's just about 5% away from its life highs. Back to you.
Okay, got that, Rima. So Rima is saying the revenues came in higher than expected. The deal wins are way higher than expected, and therefore a longer tenure than it has ever been. So those are the positives. Let's get one more. I mean, it's just that at 9 a.m. we once again remind you about the big stocks that may be buzzing today. NMDC is the other one. Nigel, why?
Well, NMDC's board has gone ahead and approved the demerger of the core business and, in fact, the steel business. This was proposed, remember, in August 2020, and now it's been approved by the board. The timelines that were given by the management that by Q3 FY22, well, the demerger as well as the commissioning of the steel plant will come about. How much have they already spent on this unit? Well, they've spent close to 18,500 crores odd out of the 21,500 crores odd. So there is close to 3,000 crores more that they have to spend. The problem is other private miners, they are setting up capacity of around 3 to 4,000 crores per million ton, while NMDC has spent nearly around 7,000 crores per million ton out here. The street, remember, was not giving it much value. In fact, most of the street was giving it 0.5 to around 0.4 times of what they spent. So now, in fact, the street will start giving value to this particular asset. Where does the upside come from? Now NMDC can focus on their core business rather than spend on the steel plant. The government can divest this unit. If they can do it and get a good value, then that's positive. And can they commission this plant by Q3? That's where the upside comes from. Edelweiss, for one, has gone ahead and given value to this particular steel plant. They're assigning 22 rupees odd, and that's why they've upgraded the stock to buy from hold earlier. Back to you guys.
Thanks a lot, Nigel. By the way, the first tick on NMDC is 10% higher. But let's see how things pan out.
By the way, this is after yesterday's move. The news came at 3 o'clock yesterday, and the stock is an F&O ban. So the cash market volume between 3 and 3:30 yesterday were humongous. Massive volumes got traded in
and
cash
even
market
now, I
yesterday.
think it's 7 lakh volumes in the first minute.
Yes, so I mean, this news is not post-market hours. It came during market hours, last hour, and you saw. In fact, just pull out yesterday's chart of NMDC. I think that will tell you. I was doing closing bell, and I remember reading the news out at that point, and the kind of volumes that the stock was trading.
The stock went from 167 to 175 in the last, in 1 minute.
Yes.
From about 3.5 to 3.6.
Yes.
It just went through the roof, rising about 10 rupees. Okay, actually anything metal is good. Anything metal and steel is even better for the moment. So Tata Metallics becomes very important. It posted an overall good set of earnings in a challenging environment. Pig iron business was the one that did very well for the company, though on the ductile iron pipe business, analysts would perhaps complain a bit. Sandeep Kumar, the managing director of the company, is joining us. Good morning, Mr. Kumar. Thank you very much indeed for joining us. Can you start by telling us more about the pig iron business, which appears to have done excellently well for you? How much of it was exports? How much of it was domestic? And how was the pricing?
Good morning, Lata, and thank you for having me here. I think this quarter has been brilliant, but led primarily by the booming prices of commodities, and pig iron is no different. So we had almost a 7% increase in prices in this quarter of pig iron compared to, let's say, the previous quarter, which itself was a fantastic quarter. Well, the COVID second wave had put various restrictions in different geographies, and that was impacting us as well. But what we did was we started exporting, and that especially to China, and that helped us a lot in terms of our sales volumes, which have been the best ever for pig iron this quarter. The spreads have really boomed. I think they've really gone up from, typically our spreads are in a range of, let's say if you're in a range of about 5,000-6,000, that's an average one. It was about 15,000 plus last quarter, and this quarter is in excess of 18,000 or so. So all in all, PI has boomed. I think that's been fantastic. DIP business, the ductile iron pipe business, got affected because of the fund flow and the fact that it always takes a bit of a lag compared to the rest of the industry on the steel. So, and I think you will see the impact of that coming in over the next couple of quarters. But at the moment, I think quarter one has been brilliant.
Exports, you said? You didn't give us the number.
Right. So we did about 25% of our total sales volumes in quarter one in pig iron was to exports. So if we did about 89,000 tons total sales volumes, roughly 1/4 of that went for exports.
The ductile iron business has been struggling a bit. In fact, even in this quarter, the total DI pipes sold was 50,000 tons. I understand it was a fall of 33% compared to last quarter. What are you looking at for the full year in terms of DI pipes volumes?
So quarter one is normally a weak quarter. DI pipe business is very seasonal. So quarter four is the best. So it's not fair to compare with quarter four. We usually compare, year on year, but because last year was a lockdown and therefore we didn't give the figures for quarter one because that also wouldn't be fair. That's one. Secondly, in West Bengal, we had restrictions by the government, about 50% of labor only you could deploy. So our production got hit. We had to cut down on some lines. So it's a temporary problem. But despite that, I think we reached 50,000. The market on ductile iron pipe is really moving now and moving very strongly, considering the boost by the union government through the Jal Jeevan mission. So I think as we look forward to the second half of the year, things would really turn around for ductile iron pipe.
How long will your orders suffice? I'm given to understand that nowadays you have, orders sufficing for a longer period.
Yeah, so I think last time I'd mentioned about 16 to 18 months. Right now, it's more like 14 to 16. Which is something we are consciously going a bit slow because the prices are moving up. The ductile iron pipe, the prices have moved up almost by 30% compared to, let's say, last year. So it's a good move. The only thing is, since you have longer term orders, you're still executing orders which you booked last year, and therefore the price rise is not reflected in our earnings right now. All this will start getting reflected, I think, in the second half of the year, particularly quarter four onwards.
Redraw contracts now, the new ones that you enter into, to factor in raw material changes?
Absolutely. So, the raw material prices, iron ore has moved up